Very good afternoon, everyone. My name is Gaurav Shresth, and today we have a webinar on a very interesting topic, which is SLBM, Securities Lending and Borrowing. Now, SLBM, as the name suggests, it's a product where you can lend your stock that you have in your Demat account for a long term, and you can earn a monthly income on your portfolio. So basically, the main advantage of this particular product is that you can make an income without taking any kind of a risk and without doing any kind of a investment. So let us start our presentation. So as you can see, there are basically two main participants which is involved in SLBM. One is lender and another is the borrower. So lender are mostly long-term investor, long-term or a short-term investor. Any client, any investor who who don't want to sell their stock in a coming 3 months time or in coming 6 month time at least. They can be a lender. They can lend a stock for a particular contract duration. A borrower are mostly arbitrager. What they do basically is whenever there is a positive spread, whenever the cash price is trading above the future price, and there is an arbitrage opportunity, they can short sell in a cash market. They will buy in a future market, and they will use the stock from a lender to create an arbitrage position. So most of the borrower are arbitrager. Now again, 90% of the borrower are institutional arbitrager, but 10% of them can be and short seller in a cash segment market. Now all of you are aware that there are many companies who are not available in FNO, and in case someone want to do a short selling in that particular stock for a positional basis, for that they will require an delivery. So for that, what they can do, they can short sell in a cash market, they can get in stock from a lender, and they can provide it as a delivery. So this is also one way how someone can be a borrower. But mostly 90% of them are arbitrager or some kind of an system trader, and someone might also be using an option strategy or option of future or any other way for which they will require a delivery of a particular stock. The main feature of SLBM is that it does not carry any kind of a risk since it is completely backed by NSCCL. NSCCL stands for National Security Clearing Corporation Limited. So NSCCL basically acts as a financial guarantor for the entire transaction. What NSCCL also does is, they charge a hefty margin from a borrower part. If some borrower is borrowing a stock of, let's suppose, 1 crore rupees from you, a borrower have to keep with exchange 1 crore 25 lakh rupees for the entire contract duration. Not only that, NSCCL also have a mechanism of auctioning process. In case even after a margin, if a borrower default, NSCCL will make sure that through auctioning they will bring back your share and deliver it back to you. So NSCCL take all the measure and act as a financial guarantor for the SLBM transaction, not only for the lender but also for a borrower. Overall stock eligible for the SLBM is more than 370. Now this data keep on changing on a month-to-month basis. NSC updates the data on their website. The normal thumb rule is that all the FNO stocks are available, and apart from that, the E group stocks are available for the lending and borrowing. The contract duration for SLBM is starts from 1 month and goes up to 12-month period. Obviously, the liquidity will always be available in the first 2-month contract only. So for the current month, as you can see, it's the December month is going on, so you will find more liquidity in the January month contract and Feb month contract. After a few days, after 1 week or 2 week time, the liquidity will shift from Jan month to March month, and Feb month will remain the most liquid contract. Again, the normal, the thumb rule for the liquidity is that any contract which has an expiry between 30 days to 45 days will have the best liquidity. So you can see the participants in SLBM. With lender and borrower, there is two brokers also will be which will be participate in the entire procedure, entire mechanism. So from lender part, there will be a lender's broker. From a borrower parts, also there will be a borrower broker, and in between there will be an exchange, NSCCL, which will work as an overall mechanism. Now, benefit for the lender is obviously you can earn an extra income from your idle portfolio. The stock that is already lying in your account and you're not able to make any profit, you can just on a monthly basis you can lend it You can give it on a rent, just like you rent your properties or your car, and you can earn a monthly income. There is no limitation of minimum quantity to lend. You can even lend one quantity, you can even lend 1 lakh quantity, given that there is a liquidity. For all the corporate action, it's a lender who will be getting the benefit, so there is no issue for the corporate action. The only thing is that there is a series A and series B. So in the case of a series A, the moment corporate action is announced, the contract will get foreclosed and will be settled on a pro rata basis. That's the only difference, but you will be entitled for all the corporate action, so there is nothing to be worried about. Also, as we have already covered, there is no counterparty risk, as all the transactions are guaranteed by the clearing corporation, which is NSCCL, National Security Clearing Corporation Limited. And the last benefit for the lenders is that transaction done in SLBM will not be treated as a sale transaction. It will be a normal lending transaction. It will not be considered as a sale transaction. Hence, there will be a no, tax liabilities. There will be no, the transaction that will be done will not be considered as a selling transaction. Now coming to our borrowers, in case someone want to borrow, one of the major reason is obviously, as we have already covered, the arbitrage opportunity, that is the difference between the cash and a derivative market. Now once in a while the situation arises in the market when the cash price goes above the future price. Now in this scenario, obviously to use this arbitrage opportunity, you need to short sell in a cash market and buy in a future market. Now, in order to short sell in the cash market on a positional basis, you need to deliver a stock. Now, for that, what borrowers do, basically they borrow a stock from a lender. So this is one of the major reasons why someone will borrow the stock. Apart from that, as we already covered, short selling is the second most biggest reason why someone can do it. Also, the third reason can be the shortage in delivery. So someone might borrow the stock in order to avoid an auction or a seller shortage in the cash segment. Same with the FNO, same with the future and option. Someone might borrow a stock in order to avoid a physical settlement arising in a derivative segment. Now, how you can start, whether you want to lend it or you want to become a borrower, how you can start the process. The process is very simple. So first of all, you have to get an SLB privilege done. SLB privilege as of now is still an offline process, although in the coming days, it will be available on the online portal also. So, in coming time, you will be able to take the SLB privilege from the online website only, but as of now, it's still an offline process. So for that, you need to download a 6-page form from our website. Once you've downloaded a 6-page form, you need to do a signature on all the pages and submit it to the nearest HDFC Securities branch, or you can directly send it to our head office address, which is mentioned in the form itself. So this is our website, hdfcsecurities.com. In this, you have to go in a product section, and on the left hand side you can see equity, and third last option is SLB, Securities Lending and Borrowing. So you have to click into that and SLB page will open up. So at the top you can see the brief detail is given regarding the product, and the second detail is how to get a privilege. You have to click into this and an SLB privilege form will open up. So this is a 6-page form. 6 signature will be required, no supportive document like PAN card or Aadhaar card. Nothing, only 6-page form, signature, your details, and you have to send it to the address which is mentioned right at the bottom, our head office address. Obviously, you can also send a form to your relationship manager, and he can also forward it to the head office after cross-checking everything. Now, once the SLB privilege has been done, the second part that comes up is an order placement. Now, how to place an order? For placing an order, again, the process is offline. So you have to just give a confirmation to your relationship manager. As a client, you just have to give a confirmation, and that's it. Rest of everything for order placement and everything will be done by our backend team and by your relationship manager. So in that process also, you're not completely in any way involved. The moment you have given a confirmation, the order will be then placed, and you will receive a contract note, hard copy, within 7 working days. Now where to get the live rate? So one of the way to get a live rate is go to the NSE website and check it under SLB segment. So this is an NSE website, nseindia.com. In this, you have to go on the left hand side, live market, and in the live market, you have to go in the SLB segment, which is the fourth last option. Once you click on SLBM, our SLB watch will open up. In that, you have to click on a month, which you can see Jan 2020, and once you have clicked it, you will get a down drop option with Series A and Series B. In Series B, again, it's completely an individual choice. You can try it Series A also, but mostly the liquidity will always be available in Series B. So we will suggest to go in a Series B. In Series B, always go with the first 2-month contract. So I'm going with the February month contract since it has a expiry between 30 to 45 days. Again, the expiry of an SLB contract happens on the first Thursday of every month, not on the last Thursday, just like FNO. The expiry happens on a first Thursday of whatever contract month it is. So the Feb month contract, today is 16th of December, so it's approximately the expiry is between 30 to 45 days. So we will go with the Feb month contract. You can see the expiry will be on 6th of Feb. So the rate, how to read the rate? So you can see on the left hand side there is the company name. Then you can see the best bid and best offer, followed by LTP and spread. Now again, spread is the most important thing, since spread is will give you an indication that what is the code that you should basically quote it. Right now you can see for Yes Bank the best bid is available at 2.3 and best offer is available at 2.90. So what this means, that someone is ready to borrow the stock at 2.30 level. So if you have, let's say, 500 quantity or 1000 quantity, you can get it 2.30 per quantity in SLBM. Same with Infratel, someone is ready to borrow a stock at 2 rupees per stock. TVS Motor, someone is ready to borrow it 7.10 rupees per stock. Berger Paint 7.25 per stock, and India Bull Housing Finance 3 rupees someone is ready to give you for per stock. So how the mechanism works, basically, let's suppose you have a Yes Bank 1000 quantity, you have landed at 2.30 rate. So 2,300 rupees will be the gross income that will come in your account on a T+2 day after deducting all the brokerage charges and GST. And the share will be out of your account on a T day itself. The share will again come back on 4th of February, as we have already seen, that is the first Thursday. And this is how the entire mechanism basically works. So once you have seen the rate, you can place an order. To get a live rate, you can also contact your relationship manager in case you are too busy or you're not able to go to the NSE website. You can also contact your relationship manager and you can ask a live quote for the stock that is available in your Demat account. Coming to the different series A and Series B. So basically, initially, the Series A used to be the contract that used to be there, and later on, Exchange have introduced Series B contract also. The major difference is again the same, that Series A contract will be foreclosed in an event of a AGM and EGM, and the contract will get settled on a pro rata basis, whereas Series B contract will not get foreclosed in the event of a AGM and EGM. So this is the main difference between Series A and Series B. Obviously, because of the same situation, same reason, the liquidity will always be higher than a Series B. There is no restriction from our part. You can place an order in either one of them. But mostly you will also find from your end that Series B will always have the better liquidity. Now this is the example of our charges, and not only our charges but also the GST and everything. So just to give you an example, let's suppose you have lended Jet Airways 1000 quantity and the lending fee per share was 15 rupees. So your total income that arises out of this transaction is 15,000 rupees. That is your gross income. Now the brokerage will be 15% flat of whatever profit you make. So if you're making 1 lakh rupees profit, 15,000 rupees will be the income, will be the brokerage. If you're making 100 rupees, 15 rupees will be the brokerage. In this case, since the profit is 15,000 rupees, 15% of 15,000, which will be 2,250 rupees, will be the brokerage. There will be a GST on brokerage, so 18% GST. 18% of 2,250 rupees will be 405 rupees. So overall net income will be 12,345 rupees in this transaction. Now above charges are excluding the DP outgoing charges that will differ from client to client, but this is the net income that will be, that this is the amount that will come in your saving account on a T+1 day. So I hope all these points are very much clear. Now again, coming to our privilege part. In order to start an SLBM, this is the 6-page form that you can see right now in our website, where you can download the 6-page form, enter the detail and submit it. And this is the NC India website, where you can select the particular month and a series, and you can place an order. So this is the basic of SLBM. I hope the every detail of the SLBM is very much clear. Now we will be open for our FAQ section. So any question that is regarding the product side, please use this opportunity to clear your doubt. Enter your question, write your name, and click on a submit button. So we have a first question from Mr. Ravi Krishna. What is the difference between best bid and best offer? Mr. Krishna, so the difference is, the best bid are the borrower who want to borrow a stock from you, and best offer are the lender, just like a normal long-term investor who want to lend their stock. The best offer are the rate that has been put up by the lender. So just to take an example, we can see Yes Bank. We can see 1,000 quantity of Yes Bank is pending at 2.30 level, which is the best bid, and best offer is at 2.90 level. So this means they are the lender who want to lend it at 2.90, and there is a borrower who want to borrow it at 2.30 level. So until and unless the order matches, the trade will not happen. The last LTP is at 2.50, kind of a middle of both of them. And why someone should quote at 2.90 level, and how you can decide what is the level to quote. So for that, you can just refer to the spread, which you can see on the right hand side. The spread in the example of a Yes Bank is around 3.85 level. So this means the borrower has an opportunity to make a money of 3.85 out of your share. So obviously you can ask for 2.90 level or even a bit more higher than this. There is no restriction regarding that part. So again, it's just like a normal secondary market, supply and demand. When the supply and demand matches, the trade will take place. But ideally, you should be placing an order somewhere near the spread price. So if the spread is 3.85 level, you should be placing an order anywhere near 90 or 80% of that value. So in this example, 2.9 is the fair value, which most probably he should get it. The borrower, the lender should get it. We have another question from Mr. Ravi. Can you please explain us the brokerage charges again? Yes, Mr. Ravi. So the charges for the SLBM section, as you can see in this example, we have taken 1,000 quantity of Jet Airways, and lending fee was 15 rupees per stock. In that case, our total profit becomes around 15,000 rupees. The brokerage is what we are considering is 15% of the profit. So in this example, it will be 2,250 rupees will be the brokerage, and there will be 18% GST, 18% on the brokerage. So it will be 405 rupees, and the net income that comes up is around 12,345, and this is excluding the DP charges. So this is the main charges. Again, the brokerage is 15% and 18% GST. So we don't have any other questions. So I'm hopeful that we have covered everything and all the doubts are clear. We can just get an SLB privilege from our website and start lending and borrowing. You can also visit our YouTube channel to watch more other videos on a similar product that we have uploaded recently. And I'm hopeful that in the near future you will start your SLB lending and borrowing. So thank you very much for joining us. Have a great trading day ahead. Thank you.